Thank you for dropping back in Consumer Crypto Smart community. Let's do what we do best. Customers, shall we?
Sorry, the class we had yesterday was, by the time I played the recording, I was trying to cut out some unespecial parts. I realized the part starting from here was not clear. It was glitching from here, and I think people were complaining about the network thing. So I'm going to re-record it right now. So, like I said, we're going to start with the common trading terms, and this is basically for the newbies. So we have pairs. We have the pairs, and pair is basically I'll be going everything I'm going to be saying. I think almost everything here on Binance. So I'm going to be using Binance as illustration, right? So I'll go on Binance to show you what they are about. Okay, so we're talking about pairs. So what are pairs? Pairs are a combination of two coins. Pair, that means two. Combination of two coins, which actually includes, let's say what we have right now is fees per USDT. FIS is what you want to buy. Whatever is on the left hand side is what you want to buy, and what you have on the right hand side is what you have. So you can come here, you can see BUSD. If I click on BUSD on the Binance interface, you see you have B5 per BUSD, everything per USD. That is, I have BUSD, I want to buy things on the left hand side. And if you click on USDT, at the same time, I have USDT, I want to buy what's on the left hand side. If you click BNB, at BNB, I have to buy whatever on the left hand side. That is, add per BNB means I have BNB, I want to buy add. So that's it. That's just it about pairs. So you need to know the pairs you want to buy, what you have, and what you want to buy. So whenever you want to search for a pair, you can just come to here on Binance, search for, let's say I want to buy BTC, so I can select BTC. So, and that's it. It's going to search and load BTC interface for me, the charts. The next thing we're going to talk about is limit order, right? So next thing we're going to be talking about is entries. What is entry price and exit price? I'm going to imagine them together. Entry price and exit price. Entry price means the price you want to buy. That is the price you desire to buy. That is what we mean by entry price. And exit price means the price you desire to sell. That is the price. That's your take profits, your TP. Whenever you see a signal, you see TP. TP means take profits. So entry price is E. Whenever you see E or entry price, that's what we mean by E. Maybe you've seen a signal and you see TP, that is take profit or exit price. Take profit. So whenever you see TP or exit price, that means exit price. That is the price you want to take your profits. So the next one we're going to talk about is limit order. What are limit order? Limit orders, there are two types of order basically. We have limit order, we have market order. Limit order allows you to buy at the price you desire to buy. Like let's say current market price for Bitcoin is at 29,758, right? Limit order, and if you come to Binance, you see the tab. We have limit, we have market. We have limit and we have market. So we have for the limit, if you click on limit you can decide. Limit allow you to enter the price you want to buy at. And limit is actually good for you to for people that actually want to trade, in the sense that when you get a signal, you can actually decide to place your, like what I did on my last call. I said Bitcoin is going to drop to 27k, so I placed my entry when Bitcoin was still at 32,000. I already placed an entry at 27k, so I can just place an entry at $27,000 for Bitcoin. That when Bitcoin dumps to $27,000, it should place a buy order for me. Then you enter the amount of Bitcoin you want to buy. This is 0.01. Right, that's it, and that's what you follow through here. So we have limit order, and that is what limit order does. It allows you to enter the price, be either below or above. It can be either below. If you enter a limit order above the current market price, it's going to buy for you at the current market price. It's going to buy. It's going to do that is if it's on futures, it's going to do some. It depends on it. It's either it cancelled out or it's just buy at market price for you. That's if you do a limit order above the current market price. So limit order is best to actually place the order below the current market price. Why we have market order? Market orders are actually orders that execute at the market price. Right. Currently, the market, for limit order, I have a section where I can actually enter my price here. But for market order, you see that there's no section to enter my price. It's going to buy at the current market price. Now, you should be very, very conscious about buying at market price. Market price if you place another to buy for you at market price, if the market is actually volatile at that particular moment, right? The market is volatile at that particular moment, you can actually end up buying at the best market price or the worst market price. What I mean by worst and best is that if the market is actually fluctuating, going up and out, and you really don't know, you just place a buy at market price because you think it's going to go up. You can actually, by the time your trade will execute, it might actually end up buying at the peak and not buying at below. So it is actually best for you to use a limit order than using market order if you want to place any buy. I think I once had one issue like that. I think the coin I projected this coin is going to go up, so I placed an order for it at $2. Is it Bitcoin or Binance? Yeah. Placed an order for it to buy. The market was actually fluctuating, but it was currently at $2. Then I just placed to buy at $2. By the time this trade executes at market price order, it executed for me at $22. It actually put me in loss. I just had to close it in loss and wait and cancel the trade. Close the trade at loss, and I will replace my trade at using limit order. So you should be very, very careful when using limit order and when using market order. So if the market is volatile, it's best for you not to use it. So next one is OCO. What is OCO? OCO is actually a combination of TP, that is your exit price, and your stop loss. Okay, I think I should explain stop loss before I explain OCO. Stop loss should come before OCO. So for stop loss, we have trigger price and we have execution price for limit stop loss. That is it. We have market stop loss, that is going to close at market price. We have limit, and we have a trigger price, and we have the execution price. Trigger price is the price is going to, so like this is, okay, this is it. We have stop for limit orders. We have stop price, we have limit price. Your stop price is your trigger price. Whatever you enter here is your trigger price, and whatever you enter here in your limit is your execution price. That is, the current market price of Bitcoin is around 29,800. That is, I'm saying if the market is actually dumping and I want to stop out, I want to stop losing. Stop loss now. Stop loss doesn't mean you're not going to lose. It only reduces the amount you will have lost if you do not place a stop loss. The stop loss doesn't stop you from losing. It only reduces the amount you will have lost if you don't place a stop loss. If the market could go below your stop loss region, you're going to keep losing. But if you place a stop loss at the region and the market gets there, it's going to stop you from losing. That's what stopping you from losing is what stop loss is all about. Okay, so for limit stop loss, we have the stop tab actually is the execution price. That is, the current market price is at 29,800. I want to place my limit price. That is, if the market that's going to be sell. So if the market gets to if it dumps to 29,400, it should trigger. That is trigger. It's not selling. It's a trigger, and when it gets to 29,309, it should sell. That is just the explanation of it. So what OCO now did is OCO now matched. I think basically OCO is on Binance and manually on BitMEX. What the OCO now did is they allow you to be able to take your profit, place your take profit and your stop loss at the same time, which is actually very good. It is best. It's the best to use whenever you're placing your stop loss. You want to place your target and stop loss at the same time. So for the first tab, where you have the price, the first section is where you enter your price. That is, let's say when Bitcoin gets to 32,000, it should take profit for me. Like I said, I bought at 27,000. So because I bought at 27,000, I'm saying if you get to 32,000, it should take profit. That is it. But if it did not get to 30, now OCO means order cancel order. That is, if one of this order get executed, it cancel the other one. If I place a target and it did not get my target, it hits my stop loss, it's going to cancel my target and take stop loss. But if it gets my target, it's going to take my target and cancel stop loss. That is it. That's just order cancel order. So 32,000 is my target. Then my stop loss is if Bitcoin drops to 29,500, it should trigger. That's it. Trigger my stop loss. But when Bitcoin drops to 29,309, you should stop it out. That is, I'm going to be out of the trade. That is, if Bitcoin did not get to my target, which is 32,000, right? So that's how to place OCO. That's the order cancel order. Then we have indicators, right? Next one we're going to be talking about are indicators. Indicators are they are like the word says, indicators are they actually show you they show you sentiments, they show you different things, signals. It's not like just giving you signals. Indicator give you signals. Indicator can either tell you when the price is going to bottom. It can either tell you when the price is going to when the market is going to be bearish or bullish. It can either tell you where to enter. It tells you the market momentum, like the momentum of the sentiment and also momentum. It now depends on the indicator you're using, right? Right now we have two indicators on here. We have this line is an indicator, like these are moving averages. This line you're seeing, this purple line and the yellow line, golden line, those are moving averages. We call them moving averages, right? So this is okay. So they actually, and if you want to select indicators for Binance, on Binance we have original, we have trading view. I think the trading view chart is not working right now, so I'm going to switch to original. So for original charts, you can click on this. If you over your mouse, it will show you technical indicators. If you click on it, it will give you all the indicators we have on original chart for Binance. So we have moving average, we have estimated moving averages, we have moving average. Then you can change the value of whichever indicator. Right now we have 7. I can change this to 8 moving average. I can change this to 50, and also change this to 200. That is, this is if I'm on the daily chart, this is 50 moving average on the daily. This is 200 daily moving averages. This is 8 moving averages. So we have exponential, we have Bollinger, we have several other indicators like that you can actually get to use. Okay, you can change the value, select the how thick you want the lines to be. If you want to increase the line thickness, these are things you can do here and save it. So you can see it. These are the lines. Is actually you can see the 200. This is my 8 moving average right now. You can see this is the 8 moving average. This is 50 moving average. This is 50 moving average. This is 8 moving average. So those are indicators. Indicators actually tell you the momentum. It depends on what you want to know in the market. If you want to know the market direction, you want to know the sentiment in the market, we have a lot of indicators, thousands of indicators that you can actually use. It now depends on the chart you're using. I mean, the original chart indicator is actually very limited. That's why I prefer using TradingView. Okay, so that's the way it works. And the next one we're going to be talking about is candlesticks, right? Candlestick is very important as well. Like, candlestick actually is more like a signal, so candlesticks can tell you the direction of the market. Like when we had this one, this candle. Now on candlesticks is very important. Candlestick, the greens and the red you see on the charts, these are what we call candlesticks, and each of them have names. Each of these candlesticks have their own name. This is a doji. This is a bullish engulfing. This is another doji. These are not really. I can't remember. Yeah, this is more or less a. We have AMA. We have engulfing. We have morning star. We have evening star. We have inverted AMA. We have. I'm going to share its content. I might probably a book about. I'm going to do a live session about. Take another class about candlesticks. I'm going to explain to you different candlesticks that you can use and how to use them. Okay, so the greens and the red you're seeing actually are candlesticks. The greens means the market is bullish. Red means the market is bearish. And sometimes it doesn't really the color doesn't really matter sometimes for you to actually determine the direction of the market. And right now, like I said, this is like a doji, an evening star. This is an evening star, a doji at the top of a trend, and this actually indicates what a reversal. So when you see stuff like this at the top of a uptrend, it's telling you there's possibly going to be a reversal. And you look at what happened now. Right now, after it, we have a very bearish month on the month. That's as in May last year. This was April. This was May. In May last year, we actually had a bearish. Month. Same thing. This is more like a bullish engulfing. And if you look at it, engulfing means this green engulf the red one, and that's bullish engulfing means a bullish, that means uptrend. While bearish engulfing means downtrend. So stuff like that are things you need to understand about candlesticks. So they have different names, they have different features. Okay, like I said, this is an introductory class. I'm not really going to be going in depth about it. Now, time frame. Now, one of aside out of everything I've been saying so far, one of the most important thing you should know and take note of is the time frame. Time frame actually, everything you do actually has to do with time. So time frame has to do with the time. Like currently, the chart in front of me is a monthly chart. This is each of the candle you're seeing right now represents 1 month. This is month of March. This is April. This is May. This is June, July, August, September. This is because I am currently on the monthly chart. If I put it back on 20, let's say I put it on 1 day, that's 24 hours. The chart will change. So you need to know the time frame. The time is very, very important. Like very, very important whenever you're trading. You need to know the time frame. And what time frame is like, each of these candles represents one day, that is 24 hours. That is why I'm currently, that's what being on a 24-hour or 1 day daily candle. So if I'm saying 200 daily moving average, this is my 200 daily moving average, right? This is the 200 daily moving average. That is the moving average on the daily. That is what it means. Moving average on the daily. This is 50 moving average. This is the moving average on the. This is 50 moving average on the daily. That's 50 daily moving average. This is 200 daily moving average because I am on the daily chart. If I put it to week, 1 week, each of these candles represents 1 week, and depending on the long term, if you want to trade for long term, because you're going to be trading, you need to know if you're trading for long term or short term, and that is where the time chart comes in place. So you need to know if I'm trading short term, then I'm going to be trading within 15 minutes and 1 hour. If I'm trading mid term, I'm going to be trading between 4 hours and 1 day to 1 week. If I'm trading long term, at least for those people that actually want to buy coin, let's say you want to buy an asset and you want to hold for a long time, you want to hold for let's say a year or two, then you should be doing your analysis on a weekly time frame or monthly time frame. I think we can have up to 3 months, a 3 month time frame. We have up to 3 day daily time frame. We have 1 week weekly time frame. Currently, this is a monthly. So I'm going to be doing my analysis. If I was going to buy Bitcoin in May last year, I was like, man, this thing is going to dump because of this. Then I'm going to wait for it to dump before I start buying. So you actually get to see that on a monthly chart. If you realize that this same candle, this is May, you might not see it on the daily chart. You might not. Let me check it out. That was May last year, 2021. It was 2021 May. Yeah, it almost occurred. It even occurred in March. Yeah, this is March. This is March. It did not occur in May on the daily. You didn't see it on the daily right now. This is March. It has been bearish since March on the daily. And right now it was later in May that it actually indicated that it's going to be bearish on the monthly. So you might not actually get to see it if you were trading, if you're doing a daily analysis, doing your analysis on the daily time frame. That's what I mean. That time frame is very, very important. So you should know how to use them. I'm going to be having separate class on how to use time frame in the course of the community. I mean the meeting we're going to be having every week. So the next one is stable coins. What are stable coins? Like I said in the previous video, stable coins are coins that are majorly pegged to fiat. Not all stable. Right now, I think the what happens to fiat, what happens to USD, what happens to Luna recently tells us that not all stable coins are stable, right? For a stable coin to go to 10 cents is actually very bad, even below 10 cents sometimes. So that's a very, very bad signal for any stable coin, and that's because the stable coin was majorly pegged to a volatile coin that was going to affect it, right? So we have stable coins that majorly pegged to a fiat currency. Let's say we have USDT, we have USDC, we have USD, we have several other stable coins, even Dinera, we have different any euro, B euro, that is Binance euro. We have BUSD, that's Binance USD. We have DUSDT, that's Tether. So these are different stable coins that you can actually you can actually put your money into. That is, if you don't want you hold a volatile coin and you do not want it to lose value over time, you can actually put them in stable coins. They are going to stay in the stable coins. One USDT is one USDT. One USDC equals to $1 basically. So you can actually hold your value in that, and you can convert it anytime you want. So that's that about stable coins. Then the last thing I'm going to talk about today is altcoin. What are altcoins? any coins aside Bitcoin is called altcoin. Any coin at all. This is Bitcoin, 29,000. Any coin aside Bitcoin are called altcoin. That is alternative coin. Ethereum, Ripple, Luna, and the likes, they are all altcoins. Any coins aside Bitcoin is called altcoins. So that is basically it for tonight. So like I said, I'm going to be dropping some coins I'm projecting to buy. Some coins you can actually buy from the beginning of the bear market towards the bull market, right? Some coins that can actually get to buy for long term. I said long term, right? And like I said in yesterday's class, one of the coin is Bitcoin. Yeah, I should buy Bitcoin at the dip. Probably projected Bitcoin might drop to around $17,000 in between September and October. Should around that region, if not below it. So you can actually get to buy the dip for Bitcoin. You can buy XRP, that's Ripple. The reason why I'm actually buying I'm talking about XRP is because of the government. XRP is the government money, so they will actually want their money to really fly. It's a bank cryptocurrency. It's immediately backed by the bank, so they really want it to fly. So I would say you should buy XRP for long term. XRP might actually end up eating about $5 or $10 later in the future, probably in the next 4 years. I never can tell. Just projection. I'm not really a fan of XRP, but as a crypto person, I'm not really a fan of XRP. But for the money, yeah, you can buy it. Then another one I would say you should buy is Ethereum. Ethereum actually has a very good use case, even more than Bitcoin right now. So you can actually get to buy Ethereum for long term. I project it's going to do about 5 figures to 6 figures, if not more. Yeah, about between 5 and 6 figures in years to come. So you can actually buy Ethereum for long term. The next one I'm going to be turning is Rocket Pool. Rocket Pool is actually a staking pool, which actually allow you to stake Ethereum. Because normally, I think for you to stake for Ethereum merge, that is a Ethereum 2.0 merge, you need to have a certain amount. I think 21 Ethereum. Is it 21 or 30? I think 21 Ethereum or so. You must have before you can stake. But Rocket Pool allows you to actually stake any amount of Ethereum you have. You can actually stake it with Rocket Pool, and you can be able to get dividends in Ethereum over years. So that's what I'm actually calling Rocket Pool. Actually, with Ethereum merging and moving to proof of stake, Rocket Pool also have a potential with that. So I think you can back some Rocket Pool long term. Then the other one I'm going to be calling is Harmony One. So Harmony One is actually one blockchain. I'm actually within the community, so I know how they're trying to restructure and build the community, build the project long term. And Harmony One is cheaper than Ethereum. It's faster than Ethereum. I think it has about between 1 to 2 seconds finality. That is, every transaction you actually push on Harmony actually can convert within 2 seconds. It has speed. It has the community. It's actually just growing, and it's very, very cheap. And I think for a long-term project, it's a coin anybody should have. And you can actually buy some Harmony One right now and just forget about it. Long-term. I said long-term. Then another one is Dexia. Dexia is actually is a project being launched on Harmony One. Dexia is a project. It's a project that actually allows it has its own use case, which allows you to actually enables cross-border transaction and allows you to convert your fiat to crypto and crypto back to fiat anytime. At least enables fiat ramping and off ramping. It's yet to launch, but it's actually going to be launching on Harmony, and it's a very, very viable project long term. So I advise you to actually look into it and buy whenever they launch. Something you can Dexia. I think the token symbol is DFT. If it's going to be changed, you can actually follow the community on Twitter or Telegram to actually be able to get information about it by the time it launched. The next one I'm going to be calling is Chainlink. Chainlink actually has a projection long term. That's a good projection long term with the community building, with the Oracle, and with the interoperability features they're actually trying to build on Chainlink currently. I feel it's going to fly. A lot of blockchain they are using the Chainlink feature, so Chainlink is really going to fly. I think it's actually something you can actually hold for a long time. The next one I'm going to be buying are actually in the same category. That is Aave and Aave Compound and MakerDAO. Those are coins that actually they are more or less doing what the bank is supposed to be doing, borrowing money, lending money, and the likes. You can actually get borrow money and lend money, invest into it. So those are, and I think the last one I might probably mention is Olympus DAO. You can actually check it out. They have a very good project. They more or less doing what Luna is doing, but doing it much better. That's what Olympus DAO is doing. So I think that those are the coins that I'm projecting for now, for long term, that you can actually get to buy and hold in your portfolio. Now, if you're going to be, like I said, if you're going to be invested, don't borrow money. Don't go and use your rent money or school fees to actually go and buy a coin. it might actually go up, I can go down. You never can tell. So it's best for you to, if you project it long term, invest the amount of money you can afford to forget about. I keep saying you can invest the money you can afford to lose. But yeah, but invest the amount of money you can afford to forget about, for at least for sometimes, at least for a year or two. And by the time it's actually used, it can actually use a lot, each sum of money. That's it. So that's it for me today. And thank you all for joining. I really appreciate your time. Please don't forget to like and subscribe. Share with your friend. That's the only way you can actually help support and appreciate what we're doing here in CSA. CSA is a community of blockchain and crypto enthusiasts and traders. So thank you all for joining. Don't forget to subscribe and like, and don't forget to also trade smartly. That's our motto. Trade smartly. Thank you. Have a lovely night.